Welcome in, you trader nerds. And look who has joined us from Disney World, our own Ed. Ed. He probably can't talk because he's riding some Dumbo ride or something at Disney World. But anyway, good to have Ed with us. Also good to have my Alabama student with me. Kaylin is in the room. So Kaylin was like, I'm kind of overwhelmed by all the stuff and all the stuff. She said, would I create a room called the Guppy Room where beginner type questions can be asked? So what I want y'all to do is y'all kind of take Kaylin under your wing and help her. She really wants to learn this stuff. She's very entrepreneurial. She's got an LLC that's a holding company for different things that she does, and she kind of wants to learn this stuff too. So y'all take Kaylin under your wing. Ed, were you going to grace us with some audio of you or something? What are you doing?
Oh, you're so kind, Bobby. Yeah, I'm here. Thank you. I just want to do a quick public community service announcement.
Yes,
we're still having people sign up. And I just posted in the live chat area this message. I sent it out to everyone. So people are still signing up for the conference on May 13th. And May 11th is when we're all going in on Thursday. I just signed someone up for Thursday night.
Wonderful.
The Thursday night speech for Tom Sosnoff. Those are still available. So, and I'm hearing the hotel is still honoring the $155 a night rate. So it's still not too late. I think we're up to we kind of popped from 9 to like maybe 13 or 14 people, it looks like, including maybe a spouse or two, or maybe a couple of, I don't know, if it's children or whatever, but we're up there. So it's going to be a great weekend.
So it looks like I need to spring for a conference room for sure, Ed. I think we'll be more comfortable there. Yeah, that's going to be great. So we'll get a little conference room. We'll all sit around. We'll chew the fat. We'll eat pork skins. We'll drink sun-kissed orange drinks and just have a good time. I may even go barefooted so y'all can see my 9 toes. What do you think about that, Ed? Ed, tell everybody about the concert you went to the other day. I mean, Mo posted a picture of you and her at a concert.
I will do that. In fact, I should put up a little clip of it in my room. So my mentorship song, I don't know if you make people pick out a mentorship song every time now.
Always.
Okay, well, mine was this group called Switchfoot, and the song is Dark Horses. And we went to see Switchfoot at Disney at Epcot. They were playing 2 nights. We saw them 2 nights in a row, so that was kind of cool. And y'all tell me you couldn't burn Baton Rouge down on a wet day with Ed's money. Ed is springing for year-long Disney tickets, y'all. I mean, the man, he's down there for 2 weeks. But Bobby, I'm a master of the deals. So here's the deal.
Okay.
I'm using my daughter's timeshare to get 2 getaway weeks, which are well under $1,000 a week. So that's a pretty good deal. And it's a mile from the road to Disney.
Yeah.
And we had bought 10-day passes for 2 weeks when we're going to be here. So I just get to upgrade those for a few $100s a piece into an annual pass. So the travel guys are smiling on
let's run this by Mo and Beth. Tell them that we're planning a joint vacation in October and see how that goes over with Mo. I'm sure she'd be so excited.
Well, tell me where.
Wouldn't that be wild? Wouldn't that be awesome if me and Ed were all at Disney World?
Maybe we can have a trader nerd vacation / conference, and we can write off the travel expense as a business expense. What about that?
What if me and you made a selfie with me and you on the Dumbo ride?
I would do that.
Would that not be awesome? Me and Ed on the Dumbo ride. I couldn't wait. So if y'all want to come to Atlanta, y'all come. Hey, we may have a Disney World conference. That would be good. And we could write some of it off on our taxes. That'd be really good. We'll have a Trader Nerds Disney World conference.
Y'all private message me if you do sign up, and I'm not in charge of signing up at the hotel or the what is it, the Dirty Trader or the Bad Trader tour, whatever they call it. But I am able to message someone at Tasty on the Thursday night thing. So I was shocked that there was still availability, but again, as of this morning, there was a spot. So.
And what we're hoping is that Tom might take us all out to dinner after that. Wouldn't that be cool? And look, Ed, what we need to do, because what I'm going to do is I go, dang, I forgot my credit card. And that way Tom would pick up that would be so cool if that actually happened. So anyway, we'll see. All right, y'all. So this is good. This is exciting stuff. Exciting days that we live in. And my wife is so happy that they planned this thing on Mother's Day weekend. She's all excited about me missing out on my daughter getting ready for her prom on Saturday. So as soon as the Tasty event is over, I will be buzzing out to get back ready for the prom. My daughter, she's 18. She finally got her learner's license yesterday. Unbelievable. Now I've got to teach her to drive. I'm just glad she got her license because she said, Dad, I want a new phone. I said, tough. When you get your learner's license and her old phone's not working. So it's amazing how holding something over a teenager's head, like a new phone, will get them motivated. It's unbelievable. Hey, y'all, the market is down 0.13%. I think it was down as much as like 0.6% on the day. The good thing is we don't care about market direction, do we? The volume is about what it's been, about 4,000 every 2 minutes traded on the E-minis. The VIX is down even lower, y'all, 16.35. Our AD is negative 94, our advancers over decliners. It just peaked a while ago, and now it is going down. So just kind of a nothing burger day. And if you look at the expected move, let's look at our expected move. I thought this would be the week that we would get a outsized move, but doesn't look like it's happening, which means with every passing day, the probability that we're going to get a downsized move increases. Come on, man. Here it is. So here's our expected move once it populates here. And you'll see that we are well within the expected move. We were well within the expected move last week and the week before. This week, it was, it bounced above it. So we've just been flat for about 3 weeks, which is really great for our style of trading. We don't, but keep in mind, the bottom is going to fall at some point. Now, what you'll notice is this should be a nice little level here of resistance when we get up there. So, that's about where that expected move is. See, these expected moves were about the same. So we'll see if we can bounce above that. I would say probably not. What does our little big green monster say? If you don't know what the big green monster is, we draw it on the first trading day of every month. It shows us where price is fairly priced and where it is oversold and overbought. So those are the levels that we're looking at on the E-minis. So we are oversold for the fair market value above. Here's where it's fair market value. We are oversold. This indicates that we should go up, all right? Should go up, but we will see. The longer we stay here, the more I think that we will go up. And that's also confirmed by our little friend, what is our little friend? Ovi says Switchfoot is his top 2 favorite bands along with Need to Breathe. Now, I've never heard of Need to Breathe. How about that? Where's my dang little thingamajig here? There we go. So this hanging out here, it wants to break this level and it wants to go up to the top of the linear regression. So we'll see. But if I were looking at the charts, it really kind of looks bullish. The only problem with that is volatility is so low that we would expect a volatility increase. And to get a volatility increase, that would indicate that we would have a market down move, right? Let's look at volatility getting destroyed, y'all. Destroyed. Look at this. It has not been this low in quite some time. Back in November, right? November? Yeah, when it was this low. So, and you know what happens when it gets low? What does it do? It always does this. It always does this. And it's just like your life. There are mountains and there are valleys in every one of our lives. You go, oh man, everything's going good. Life is great. And the next thing you know, boom. And so you go through a valley. It's the same thing with volatility. It's the same thing with the world. And human behavior repeats itself over and over again, whether it's Putin invading a country, whether it's Hitler invading a country, whether it's Stalin doing whatever. It just repeats itself. It really, really does. So we don't care what politician is in office. They all represent the corporation. We are a country of the corporation, by the corporation, and for the corporation. Forget the little people. This country is not for the people. It is for the corporation. And whether you are a Democrat or Republican, they all represent corporate interests of some sort. So follow the money to see what interests the Democrats are following or the Republicans are following. They all represent corporate interest or some interest. So that's why I invest in the S&P 500. That's why I've invested in the S&P 500 since I was a little bitty thing in undergraduate school. I was about 20 years old when I first started putting my little money in the S&P 500. And so that's why I trade it today. I don't do DraftKings anymore like Matt taught me into. We don't do all that garbage. I just do the S&P 500. And I think it's a good thing for you to trade as well. All right. So with that opening segment today, let's see how Sweet Bobby is doing. So we'll look at our little portfolio here that has a 97% probability of profit. I love it. We are at 36,903. Hallelujah. Praise the Lord. 36,903. Hallelujah. And fire up the band.
Well, we're moving on now.
What's my sound messing up? Does that sound a little shaky for y'all? What's wrong with the band? The band is like, they're jumping a little bit. All right, so we're up a little bit. Now, this count has not fared as well as our other count. Let's be totally transparent. Why has it not? It's a good question. I'll tell you why I think it is. In this account, I don't monitor my individual trades. So we kind of show you a way to do it without monitoring your trades. And so what happened was I was unable or unwilling to go in and take off all those Sweet Bobby hedges that were kind of taking us down. Y'all remember? So I was not able to identify those particular trades. So in doing that, I just let them go. And so this account has not done as well as the other account, but we know that's fine. So let's say our little account is doing, Kaylin is in here. So we go three metrics that we follow. We follow delta. So 35 positive deltas means that we are long the market. And this is the equivalent of owning 35 SPY shares, which are trading at 400 and whatever dollars, right? So that's what we're equivalent of. Then our theta is the amount of premium that we expect to collect every day as profit. It's the decay. We sell a premium for $100. We expect that to decline every day. And we should, all things considered, make $41 a day in profit as those options decay. The third thing that we follow is our buying power. This is the amount of collateral that the broker requires us to put up to make all of our trades. And we try to monitor these three things. So we're at 35, 41. So we go into the spreadsheet and we put in 35 and 41. Now, I'm really addressing this to Kaylin today so she can understand. So 35 is our deltas. We have a little thing here that says conservative deltas and max deltas. With this particular VIX at 16, they are both at 55. So we don't want to get our deltas higher than 55. We would have too much directional exposure. So we're good. We're at 35. Our theta, we want to be a minimum of 0.1% of our net liquidation value. We're at 0.11% times 36,903. That's what we are. So we're at 41. So that's good and green. And then our final thing is our buying power. We really don't want to get more than about 30%. And our current our current buying power is 11,765. 11,765. Okay. So we're at 31.88%. So what you got to do is ask yourself, am I comfortable at this risk? And my answer is, oh, yes, indeed. I'm fine with that. A lot of y'all would panic and go, oh, my God, I got to close. No, this is just what we try to keep it on. But it's also telling me, Bobby, don't put on another trade today. You know, you're green. You're okay. Just hold your road. Let's collect our $41 a day. How much profit did we make from yesterday? We made $32. All things equal, we should make $41. Well, the other day we made $227 in one day. We lost $68 yesterday. So the theta collection of $41 is not linear, right? It's not coming out linearly, but it comes out sporadically, as we say in Ranburne, Alabama. Got it? Preach, Bobby Carlos. Exactly. Tell them. I don't care if you're Republican or Democrat. That don't matter to me. Oh, and let me just say this. I was telling my class the other day. The media wants us to all hate each other, whether you're liberal or conservative or socialist or they want us to all hate each other, and we don't. That's the good thing. We can have civil discussions about different topics. What they want us to do is to hate each other, and you should not hate your neighbor, right? It's like the Bible. My pastor says, Bobby, the Bible is so simple. I said, really? I said, there's 66 books and a lot I don't understand. He said, Bobby, it's love God and love people. Oh, that's it, huh? So it's really that simple. So you got someone that's different from you. Don't be making fun of them. Don't be, mean to them. Be, consider their feelings. I mean, they got feelings too, right? That's why I don't go out and I'm not, shooting up my Bud Light cans. I don't drink Bud Light. That's not I don't drink beer, right? Because I'm afraid if I love alcohol and everybody's upset about the beer can. I don't get upset about a beer can. Whatever they want to do with a beer can, that's fine. I'm not upset with it. It's not necessarily that I agree with it, but, if you like the beer, drink the beer. But I do wish that a lot of companies and things would stay out of politics, right? Because it does divide people and it makes people angry and mad. But remember, they want us to be angry and mad. So you and I've got to fight that, and we can't be angry and mad at each other. Just say, hey, not everybody thinks the same way. All right, that's my political stuff for the day. All right, so let's go to my next account. So we got that one account done. Let's see how we're doing over here. Let's see if the band can play a little more music over here. So this is the Crimson account. This is the one that's killing it, y'all. This is the Bernie Madoff account. 35,494. 35,494. So let's go put that in. Look at this. 35,494. Oh, yeah, 35,494. Give me my $10, Jack.
Well, we're moving on now.
Got to work on that band. What is wrong with my... Man, y'all gonna have to work on that. Why y'all? What's my band giving up on my little music there? All right, so we're up $10 today. Wham. Now look at this though. Here's what you got to see though. Look at this streak we've got. We have not had a losing day since April the 4th. Oh, be still my heart. So we made 66, 992, 29, 111, 13, 105, 48, 90, 35, 10. So we're at 4.09%. We are at Bernie Madoff numbers right there, y'all. We really are, except ours are real. Oh, let me make one clarification though. This is 4.09% above my beginning balance. So to find our real income, I need to do this on a monthly basis, and I do this on a monthly basis over here. So we were up 3.41% this month, up 2.3%. Then March, the Volmageddon got us. We were down 3.7%. So really, whatever we are this month will tell us what our real percentage increase is. So I just want to make that distinction. It's not a big distinction. I put, several $1,000s into the account this year. So that's on the original balance. All right. So let's see how we're doing after we make $10 today. Where deltas are 32 minus 7. God, I hate doing math in my head. I can't do that. Let's see. That's 25 and 36. 25, 36. Let's put that in. So we should make $25 a day. No, $36 a day. Right? So we could be a max of 53. We're at 25. That's good. Look at us, y'all. We are right at the 0.10%. Go, Bobby. Go, Bobby. Go, Bobby. Go. You stud muffin. And our buying power, we don't count the buying power on these little T-bills. We just count our micro positions here, which would be 10,293. 10,293. 10,293. That went down a little bit. Look at this, y'all. That's what you call a perfect account. That is a perfect account. Look at this. Green, green, and insane green. Rah! That is so good. Yeah, and so many want the drama. Yeah, so many do want anger does sell, though. I mean, if you're, Drudge Report or your Fox News or CNN or CNBC, or that's what sells. Division sales. And I just don't think we're that divided. I really don't. Maybe I'm wrong. I just I don't think we are. I'm an optimist though, so I like to be optimistic. So I don't know. I live in a good world. All my gym buddies are there. I was working out with my mama today in the gym. Life is good. My mama's happy. Everybody's happy. Everybody's just having a good time. We don't hate nobody. All right. So this account is perfect. There's really nothing to do. Now, I could come over here and look at our trades and make sure we got no signals, nothing telling me that I need to close anything. Well, how do you know, Kaylin, if I'm going to close something? I'm trying to let my naked stuff go down to about 21 days left in the trade before I close those and roll them out further in time. That's kind of what I'm doing. Now, some people are doing a little different. Ed and Evan, I believe, are closing their naked puts when they get to 90% profit. I'll be still. So here's my naked. So look at this. Now, Ed would have a flip. He would jump off the Dumbo ride at Disney to go, my God, Bobby, you've got to close that. And I'm like, Ed, close your roll. You know, I'm used to being at 90% profit. I'm going to let that go a few more days and then I'll close it. But if you want to close them at 90 and roll them out, hey, baby, knock yourself out. It's still giving me a theta of $1.59 a day. So I should collect $1.59 a day on that. Now, here's one that's at 90% that's giving me theta of $3.19 a day. It'll be still. So, you know, comparatively speaking, if you had to close one of them, you close this one with the less theta, and then you roll him back out to around the 60 days. Okay. But there's nothing that says that I got to close him. And I'm comfortable with where he's at now. Now, why do we close him at 21 days? Tasty Live has done so much research, y'all, that just shows us that there's a benefit to closing them to prevent gamma, which is the acceleration of delta. There's a lot of research that shows that it prevents tail risk events, black swan events. So yes, Kaylin, I would roll it out to another closest to 60 days. That's exactly what I would do. Reestablish the position. So you certainly can do that. And let me just show you. Why don't I show y'all what that looks like, right? Yeah, if y'all remember, this one's going to have $1.59 in theta, right? So let's pretend that I'm Ed. Oh, God, that's scary even saying about it. Let's pretend I'm Ed. And Ed says, Bobby, you got to close this. Okay, Ed, I'm going to close it. Okay, let's pretend I'm Ed. So I'm a cheapskate, so I want to pay as less as possible. So I'm going to try to go with the mid price, right? We're going to close that little booger at 340. Let's see if we get filled. No. So what you do is you work it up. I got nothing but time. I'm retired. I'm old. I'm, trying to find somebody to cut my grass. I've yet to cut my grass. It looks like, honest to God, y'all, it's like a Guatemalan jungle outside. But I did get somebody, the dope head, the drug head, the meth head, did take all of my, he bush hogged the place. Meth heads are extraordinarily good at that. And he also got the mattresses out of my front yard, which is really, it looks so much better now, even though it looks like a jungle. So we got out of this one, the 3,600 at $3.45. So let's look at that. So let's put him in our spreadsheet, show y'all how that would work. We're doing all this for Kaylin, y'all. We want her to see this. So we go, here's this 3,600, right? That had, wait a minute, there was two of them. Oh, here's one. This is the one I closed, the one here, right? So 3,600, 1,3600 with 30 days to go. And we close that at, what was it, 345? God, the memory goes, 345. Let's see, 345. And Kaylin, everyone's going to take you under their wing now. They're going to help you do this, okay? We got a great group. So I closed that at 345. So sweet Bobby got out on the year of our Lord for 1823. So I made, look at this, y'all, $149.81. Beth, load up the Woodside station wagon. We are going to Applebee's tonight, baby. Yes, we are. Applebee's is my home. So that's what we're going to do. So I made a great amount of money on that, $149. So what we would do then, Kaylin, is I would say, well, let's roll that out, right? So what we would do is we'd go, okay, here's our MES stuff. And my trading plan says closest to 60 without going under. Now, some of your trading plans, like Pratty, that's going through my mentorship right now, Pratty's is closest to 60, regardless. So he would go to 58 days. But I'm going to go out to this 72 days. Now, where are you going to put it? Well, normally we go where you're going to collect about $24 if you're doing a 111, right? So I would sit here and go, I could do a 112 at $12, or I could do a 111. Look at this show If I rolled it to the 3,600 to the same strike, that would be a 7 delta, 7.5% probability that's going to end up in the money, which is a 93% probability you're going to make profit on that. Or I could go up here and go, well, hello, ladies. I could even roll it and go, how about let me roll this thing up to about, where I get, I don't know, $21 or so. How about that? So then I could say, okay, well, let's try to get 21.25 for the 3,700. See if we can get that. Aha, 3,700, 21.25. Y'all remember that? 3,700. I done forgot the price. 3,700, 31.25. So I'm gonna put that in. Now, here's what I'm gonna do also. So we're gonna go MES. We did one contract, and I'm gonna name this naked put 37. 37. And 3,700 puts naked 72 days in the year of our Lord 4/18/23. And I put him on for what was 21.25, right? Now, what's this? This one, probably when I did it, it had a put debit spread with it. So what I'm going to do is, if that is the case, and I don't know, didn't look like I put one on there at that time, but what I like to have is one put debit spread for every decade position that I have. So I don't have quite as many as I should now. So what I'm also going to do is I'm going to do a little put debit spread. Okay. Now I use Tasty Trade to figure this out because it's easier. So what I want you to do, Kaylin, is even if you don't have an account at Tasty Trade, I want you to open up open an account. I think you can still use their platform and not fund it, or hey, put $1 in so that you can use their account. It's just easier to build the trade over here. So I go to the trade tab, I go to the table, right? I'm going to go that same 72 days, and I'm going to do a long put vertical. Okay. And I make these 50 wide, 41.74, 41.25. And I want to go down to where it's about $9.75 or $10. So I move my strikes down to $9.75. And this is where I could really get it filled for about $10. So we're looking at the 40.70, 40.20. So since I built it over here, then I'll go over here and I'll go, okay, 40.70, 40.20. 40.70, 40.20. Now you can build them over here. It's just harder. Okay, so I'm going to click. Now, Kaylin, yesterday you were changing this to vertical and everything. I just do it this way. I left click on the ask to buy. Then I hold my control key down and see this all comes up because you have to do that to do two legs. So then I go 40.70 and I left click while I'm holding the control key down on the bid to sell that one. And you see that's at $10. So I go confirm and send. That should cost me $50 plus commissions, $52.94. Ta-da! And jack squat crap, nothing. And then what I got to do is I can either wait on it to fill or I can go up and fill that at 10.25. I'll just get it over at 10.25. Ta-da! There we go. So we're filled at 10.25. So we go put him in the spreadsheet. Now see how I got 14 and 10 here, 22 contracts and 16. So let's go put him in. So I did MES. And this is one contract. And we'll call him PDS 37. And we did the 40.70, 40.20 puts. This is a debit spread. 72 days, 4/18/23. And we filled it at 10.25. Now, let me go over this for everybody, especially Kaylin. Kaylin, your spreadsheet is designed so that you only enter information in columns that are blue, this color blue. So here you would enter something here. So let's see if that's the case over here. I think I made this, yeah, blue. You don't enter anything here. You only enter things in blue columns, right? Same thing on this one. You enter things in these blue columns. Everything else is auto-generated for you. So now when I go back to my realized returns, look at this. Now I've got 11 put debit spread positions. Ta-da! The market's up 7.72%, while we're up 4.09. Okay, we're catching them. We're catching them every day. So do you see how to do that? And then, Kaylin, what I also do is I go over here right? And I put these things in their little respective little holes. So it says unallocated, right? So I'm going to go here and I'm going to put this 3,700 into my naked group. And I put my put debit spreads in my put debit spreads group. Ta-da! Now I'll show you something that Ryan showed me that will save y'all tons of time. Okay. Go over here and click groups or arrange positions by order. Arrange positions by order. And that will keep all of your put debit spreads together. So what's this? Let me show you how it works. So if I'm looking at my whole list of put debit spreads, look at this. It's got them all together. Look at that. What a time saver, right? So, you know, if you wanted to do something with your individual time saver, it's got them by order. Isn't that cool? So if you didn't have that, it would just have all the puts, you know, listed like it's listed on the here, you know, and you'd be like, oh crap, what goes with what? So this way it's really easy to keep everything together. Isn't that cool? So remember, we said that 3,700, the one that we did, we closed, the 3,600 had $1.59 of theta per day. Let's see what our little 3,700 has. Here she is, right? So 3,700 has theta of, is that my theta column? Yeah. We went from $1.59 a day to $2.61 a day. Now, admittedly, we went from the 3,600 put to a 3,700, but we, you know, that's really safe. And we increased our theta. So our overall theta should have increased, right? So let's see what our overall theta increased to. So now we're at 37.09, and I think we were at 36. I said, I think we were at 36. Yep. So now we're at 37. Isn't that cool? And what did it do to our buying power? Well, let's say 10,293 was what we were at. Now we're at 10,331. Okay. So, you know, 10,331. So it went up, what, $40 or so? Okay, big deal. And we increased our theta and we slightly increased our buying power. That's how you do it. Isn't that cool? So this should be a good little intro of how we do what we do. And then you just do it over and over and over. And really is as simple as, it's as simple as the whole process. And I'm going to do this over and over till we get it. The whole thing that we do is we sell premium, sell options premium. Okay. That's the easy part. That's putting on a trade like I did today. I sold premium. Now I bought premium too, because I bought a put debit spread, but overall that trade is net short premium. I shorted premium. I've sold premium overall. So then we allow time to allow our theta to decay. So I've got theta of $37. That's my expected profit per day. Right? So we allow theta to decay. Here's where the money is made. Manage chaos. Bobby, I don't like chaos. God, I don't either. Are you making the naked and the PDS a little bundle to balance each other out? Yeah, that's what they do. That whole little trade balances each other out. And what it looks like, Caitlin, let me show you what the combined trade looks like. So let's pretend we're doing this trade, right? And we're doing, let's say we did a 111 and I sold the 3,700 as well. Let me show you what the entire trade looks like. Okay. So now we'll go to curve and let me get all my stuff off except for these three that I'm doing. Here's what the combined trade looks like, Caitlin. Very good question. Here's what she looks like. There she goes. Miss America. Look at this. Caitlin, the trade is this. The overall premium is the 57.50. See that? And we don't care if the market goes up. We make our $57.50. Now, what's this? Here's why we like this trade. Look what happens if the price goes down. Caitlin, we're going to make $307. It's only way out here about at the 36.40 or so is our break even. Now, the problem is chaos can happen quickly. So if the market goes from here to here right now, see this little beige line? That's our P&L on the day. So today we'd be down $172 if price went down here. But if price holds here at expiration, we make the 307.50, our max profit in that put debit spread. So the passage of time is your friend. So let's watch what happens when the passage of time goes. You will notice this T0 line, which represents today, will increase as the days go by. It gets sweeter as the days go by. Watch it go up. What's this? Chunky, chunky, chunky. Look at it going up. There she goes. So now, by May the 23rd, if price goes down, you no longer have a loser right here. You're up $115. And if price holds here to expiration, you make the $307. Could you put a stop at 36.70? I mean, you could figure out what your trade would be at and put a stop on your 3,700, but I just don't use stops. And maybe I'm wrong. Maybe someone in here does use stops. I don't use stop losses. I never have used stop losses. Doesn't mean I'm not trading anything. Now, I'm not closing anything. But what our plan is now, Kaylin, is if what you sold today, and that 3,700 is I don't know, what was it, a 10 delta or so? If it becomes a 30 delta, if the market moves down towards your strike and your 10 delta now increases its deltas to 30 deltas, that's when we close it and we roll it out in time. So in a way, that is a stop. We don't want the market to move down to 3,700, but when that 3,700 becomes a 30 delta, we close it and we'll roll it out. Now, the groundbreaking research that Ryan is doing is trying to figure out, would our account have survived a COVID crash, or would we have blown up? And my session has expired. What the crap? So we want to, if the 3,700, let's show you what the 30 delta looks like. If this, that is a 10 delta, becomes a 30 delta, right here, right? Then we're going to close it. And most probably we're going to roll it out farther in time. But we'll go over that lately. With the length of time involved, you have time to react to violent moves. Yeah, you really do, right? You really do, I think, most of the time have time to react. And the first thing that I'd be doing in a calamity is probably selling futures to get my deltas in line. And so Ryan is doing that type of research. And so I'm meeting with Ryan on Friday morning to go over kind of some different scenarios and look at what he's found. We want to survive a COVID crash. We want to be able to stay in business. Now, we understand that there may be losses. Losses are going to happen, right? Most of the time, we're going to be just fine. It's those 5% of days where chaos comes in. And that's why 95% of our time is spent on chaos management. This is easy. This is easy. This is where it gets tough. And I'm telling you, 5% of your days trading are going to be this. So there's 252 trading days in a year? You're going to be butthurt, what, 10 to 11 days a year? 10 to 11 days a year, get used to it. And if you cannot manage chaos for the 10 or 11 days that are coming, now that 10 or 11 days could be 20 or 30 days. But on average, it's going to be about 10 to 11 days a year. That's when you're going to get butthurt. And that's when everybody quits and gives up and I ain't doing this anymore. But you don't realize 95% of your days you're playing the Jeffersons every day. manage chaos. This is where the money is made. Do you have the guts, the intestinal fortitude, the cojones to manage the chaos? Do you? Do you manage chaos? That's where the money's made. This is why we are able to do what we get. Were there no chaos, we couldn't sell premium and get these juicy premiums that we get on these options. We have to sell these to the losers out there buying options who are hedging their positions. So we get a nice juicy premium for being the insurance company because they are trying to manage their chaos. And we're saying, okay, we'll assume that risk. We'll assume the risk. We'll sell you that protection. And that's what we're doing. We're the insurance company. But every now and then, you as an insurance company are going to have to deal with paying out some claims when the old hurricane comes. And what do? After the hurricane comes, you adjust your premium accordingly. And guess what? Our premiums are adjusted accordingly when chaos comes. Then if you're selling premium, when the chaos is happening or shortly thereafter, we're getting to sell big old juicy fat premiums because of the chaos. Were it not for the chaos, you couldn't be in business. You couldn't do this business. So you can't say, oh man, I'm not doing this business. This insurance business is crazy. So I'm selling premiums, I'm collecting premiums, letting it decay, getting my little money every day. And you're telling me I got to manage chaos for 10 to 15 days a year? Yeah. But if you didn't have to manage the chaos, you couldn't do this. So you got to have a healthy respect for the chaos. The thing is, you got to stay in business. You can't blow up accounts. All right? So that's everything that we talk about is on managing chaos. And then the number 4 is the fun part. And that's what we did today, right? Sell premium, collect your theta, manage chaos. So fortunately, this time I didn't have any chaos for that particular option. Well, I probably did because I went through the Vomageddon. So I did manage the chaos. And then what did I do today? I sold another put. I rinsed and repeat. Rinse and repeat. Charles says, I always have a cheap unit SPX put, as Christian is saying. That way you sleep well at night. Okay, so Christian says, instead of a stop, use a 14 to 21 DTE long put for $1 to save the day if there's a black swan event. And Christian, do you do that in the E-minis or you do it in SPX?
I do it in the SPX.
Yeah, bigger. That's a
for the
bigger
whole portfolio.
Okay, so you for what size you do one 14 to 21 day, and that's where we found, right, that the 14 days was a really good protection in the E-minis. So you buying that for $1, so it's costing him $100. And how many of those per 100,000 would you do?
I just posted it today in the WikiWeeds channel. I have one SPX to secure 500,000.
Okay, one SPX for 500,000.
So that's not correct. My risk is about 40,000.
Let's say that one more time.
My portfolio risk right now is 40,000 if the SPX breaks down to 3,600.
Mm-hmm.
So I bought a long put 38.25 yesterday for around $1, and that secures the whole portfolio.
Okay, cool. Yeah, and so, buying a SPX put, so he's buying it for $1, 14, 21 days out. So he's just saying, hey, that's a little bit of insurance that I'm doing every 14 to 21 days. Let's look at it. So if you went out 14 days, right, so he's buying one for $1. So here he would be buying around the 3,700, I guess.
Yep.
Mm-hmm. Analyze trade. And see, this is the protection that he's getting, right? So let's see. Oh, I've got my price slices already set up on SPX. How cool am I? No, I don't. I don't have them like I like them. Let's see. I like this to be Well, that's fine. It shows my 12 and 20. That's good. So 12 and 20, if we get ball steps, if you did this, you would get on a 12% down move, you're looking at, that's a great deal of protection, y'all. Look at that. If VIX went up, volatility went up 26%, 12,000, 13,000, so about 14,000 in protection. If we had a vol event of 20% down, holy shimon, y'all, look at that. You're looking at, if we got up to, 46% volatility, you're looking at a $40,000 hedge, 42,000 for $100. That's pretty strong. Really strong.
IB reduced my buying power necessary for holding all my trades by 25% after I did this.
That's beautiful. So I want to make sure I understand this, though, how many that you're doing, because this, for this account, that's what, 35,000 or so that I'm spending, that's probably a little more that I would need to do, $100 every 14 days. That's a big meatball. But if you had a larger account, hey, do you mind telling me what kind of size account you're trading in? Just a ballpark figure?
I posted it everything, so you can look it up. I have a 35,000 euro account, and I bought options for 500, which generated 500,000 in credits, which I put in T-bills.
Oh, good. Okay, excellent. Yeah. So now, guys, if you got a smaller account and you don't need that much protection, you could buy the same thing in the E-minis for half the cost, right? So you're buying that one for $50. You could buy, if you buy something for $1 in the E-minis, you buy it for $1, it's only $50.
Yep.
Get half the protection. Or if you don't need that much protection, you can buy something in the micros. There's all ways that you can do these things. Or you could buy it in SPY. Right? You can buy a SPY put. I don't like trading SPY. I like keeping all of my stuff in 1256 contracts just to make it easy. But SPX is a 1256 contract. So it keeps everything nice and neat. Carlos, what are your thoughts on 111 versus a 112 in a low VIX environment, further out of money versus lower notional? Yeah, it's a gimme gotcha type thing, isn't it? So, I would say in higher volatility, I would probably err on the caution of a 111, because, the market's already fallen, volatility is already high. And on the low volatility, I probably err toward 112s because I want to get farther out of the money. But then there's a gimme and a gotcha, because when you're doing the 112s, you're taking more notional risk, So Christian has some posts in Wacky Weed. Okay. So Christian, that's where you posted all this in the Wacky Weed? Yeah, good.
Yeah, I did.
Awesome, Christian. Thank you so much. We appreciate that. So there's all kind of ways that you could do. And what I would say is do kind of like we're doing with the VIX hedge. Let's kind of see what our VIX hedge is doing, right? So if we looked at, let's go to VIX. Now let's see. Let me do this. This is fun. And let me uncheck everything and we'll hide positions. And let's look at portfolio beta weighted. There we go. Let me unclick everything. And let me just do my VIX stuff. Hide simulations. I'm sorry. Now, let's just see what it looks like on the VIX thing. Let's see how this works. Let's look at our VIX hedge. Okay, here's our VIX hedge. So we're running the VIX hedge now. And so what this shows is so far, were we to have let's see, this is 5% down, this is 12% down. So let's find our 20% down. Here's our 20% down. This VIX hedge in this particular account gives me $2,500 of protection. Now, the cool thing is I'm only I've only got 2 of my 4 legs yet. So when I get all 4 of my legs, I don't know, we can extrapolate. I guess I'll get about $5,000 worth of protection, you know. But that's going to cost me 3% of my portfolio a year. And then what you could say is, hey, man, what if we did a E-mini buy put, and we went out 14 days, and we went to the dollar. Right, there's $1. So that's going to cost you $50, right? So let's analyze, see, make sure y'all see that. Say $50 plus your commissions. So it's half the size of the SPX. So what we could do is we could say, hey, let's analyze that. What would that do for our little thing? It's going to cost you $50. Then let's hide positions. There we go. So let's get rid of this. Which one was it? Oh, heck. Well, they're both 3,700. Which ones were these? May 23rd? I think that was it. Well, close anyway. So let's see what that does. So 20% down, that gives you $20,000 a position. But then you go, okay, I'm doing $50 every 2 weeks. You know, that is a big meatball. So you're doing, let's see, that every 2 weeks, that's 26 times 50. That's every 2 weeks, right? So they do 26 times, that'd be $1,300 divided by a $35,000 account. So you're spending, oh, that's not too bad. That's spending 3%. That's kind of what we were spending on the VIX hedge, isn't it? Did I do that right? Yeah. That's a nice little hedge to the downside. Now, what were we doing? Y'all remember when we were buying the puts? Let's see what the plan said. What the crap is this? Oh, that's my, hold on. That's my dissertation. Let me bring up my trading plan. Sweet Bobby trading plan. All right, here we go. So it says buying puts. Let's see. Buying cheap protected puts. We were doing those. I thought I said them in here somewhere. I thought we said, weren't we doing them about $15 or so?
Do you know what you called them in it, Bobby? Because if you hit Control F,
I could find it, right?
Mm-hmm.
Here it is. Here's what we were doing. Protected puts, 14 days. And I found that in our little world that 14 days were better than 21 days. And 14 and 7 days were similar. So I said 14 days. If you bought them at around 30 cents, okay, so that would be a $15 expenditure. So let's look at that. Oh, we're covering a lot of stuff today. This is great. All right, so let's go to trade. And let's go to 30 cents. So we're going to buy something around 30 cents. And see, that dollar is maybe too much protection that you need, right? So we could buy the 33.80s. All right, let's look what that would give us. Analyze trade. And again, we're looking for crash protection. We're not looking for, hey, where's my, oh, here it goes. We're looking for crash. I mean, this is not, downside protection other than if calamity strikes, baby, that's more like it. Look at that. So that's $11,000 worth of protection, right? Which is really, really, really good. Because when you look at our overall positions, let's go back to hide simulations. And we want to show all of our trades. And this is where we dog cuss Ed for getting us into all these T-bills. So we've got to take them off. So let me take my T-bills off. Take me just a second, y'all. Hold on. There we go. All right. So right now, you've got a $43,000 loss if volatility gets up to 57% and, you got a $43,000 loss. I mean, that looks like, it takes you out, right, on a $35,000 account. So is it prudent to spend a portion of the money for that? Well, certainly. And that's with our VIX hedge. Now, our VIX hedge is not finished yet, but buying puts, y'all, is not a bad thing. And it's not a bad thing to do a little bit of insurance to the downside, because then we could go show all. Now, let me do this first. Let me go hide positions. And let me make sure that's the only thing that I've got. Okay, so now let's show all. So instead of a $43,000 loss, you got a 28 to 31,000, right? So, you could then figure out, okay, that's costing me $15. $15 every 2 weeks times 26 of those, right, is $390 divided by $35,000 account is 1.11%. So what you could do is say, hey, yeah, I could spend more so that I figure out that my buying of puts to position, for the downside and get it to about 3%. So you could buy more protection. And how would you do that? Well, instead of so what you do is this. Here's how you figure it out. Let's see. So our account is worth, let's do some math. And I don't do math good on the fly. 35,000 is our account size. Okay. $35,000, right? Times 0.03. If you're willing to go, I will spend $1,050 every year on insurance. It's the cost of doing business. I don't have an office. I don't have secretarial staff, administrative staff. I don't have inventory. But what I do have is $1,050, 3% of my money to do this, right? And then you could go $1,050 divided by 26. So you'd say every other week, you could spend $40 on protection. So that would be an $80. Let's see what that gets us. That would be us an $80 because they're 50%, right? So you could buy an 80-cent put, which will give you a lot more protection. So I could go down here and I could buy the 36.50. Now let's see what kind of protection that gives us. Analyze trade. So let's unhook that and do the 36.50. Okay, and let's hide positions. So we've only got the 36.50. Change this to the E-minis. So it'll have my price slices. Now you got, look at this. You got about $20,000 worth of protection to the downside. Now that looks good, right? And you say, oh, wow. So I could, for 3% of my portfolio, I could hedge myself by $20,000 to the downside. Well, that's kind of a no-brainer, right? Now let's go show all. So now on your downside, you're like, yeah, 24,000 would be your losses. But keep in mind, unless that drop just happened in one fell swoop, you're going to have time to adjust and to make decisions before this $24,000 loss happens, right? I mean, we've got circuit breakers at 7% down, right, which is here. The circuit breaker kicks in. But yeah, I mean, I see that as really good. So what we need to do, okay, Carlos says, Ron Bertino mentioned that $1 SPX puts are good protection. Anything lower was garbage. No, Ron B, no trademark hit. Oh, yeah. You can call him Ron Bertino. He's only tried to sue me one time, and he was unsuccessful. Well, he didn't sue me. He just said I violated copyright. And you can't copyright a trade, for God's sakes. That's why we started calling it Sweet Bobby Hedge. So, yeah, this is cool. Well, you could do this. Now, what we need to do is figure out what gives us better protection. the 3% money spent on the VIX hedge or the 3% of our money spent on the on buying the protection to the downside. Now, this is interesting too. So if we're going to spend $40, let's go. Let's go extra. Y'all ready? I like doing this. Let's hide positions. So this particular, y'all help me remember this. This one gives us $19,000 of protection. Wayne, right? What if we spent that same $40 on an SPX? You want to check that out? So it'd be further from the money, SPX. So now we'd actually have to do a $40 one, right? Because that will actually cost us $40. So if we go over here and we pay 40 cents for this one, it'll be $34.50. All right, let's analyze that. $34.50, analyze trade, which gives us more bang for the buck. So let me take this off. So remember, the $36.50 gives us $19,000 maximum protection on the 20% down move. The SPX $40 one gives us, how about that? Now that's interesting. Isn't that interesting? So if you're going to spend your money, you might as well spend your $40 on the big whopper, on the SPX. Now that is interesting. That is interesting. And I said our VIX hedge was going to give us what, $5,000 worth of protection for 3% of our count? Maybe the SPX is the way to go. That's groundbreaking. God, this is fun. Isn't this great? Where else can you do this stuff? No, I don't think it matters that we're 200 points further. Because I mean, we're we don't have to necessarily have it hit, but wait a minute. Hold on a minute. Okay, yeah, 20%. I don't have all the same. Let's see, I've got 10, I've got the 12. There's a 12, and there's the 20. That is interesting. That's going to shape my world. So what I've got, what the assignment is now, kids, and what we're going to do for Friday in our Muscadine Mafia session, if y'all are in the Muscadine Mafia, we will do a groundbreaking research. We will look at comparing this SPX, spending the same amount in SPX versus doing the VIX hedge using 3% of our portfolio. That is awesome, y'all. Look at that. 23 to 26%. I mean, that's spending the same amount. Actually, you're spending less, aren't you? Because commissions are lower here. Let me confirm and send. Yeah, look, I've got 98 cents of commission compared to the E-mini. I mean, it's saving us on commissions too. Maybe that's what we do. We go further out of the money, but we buy this. So what we'll do, let's give you a little forewarning for Muscadine Mafia session on Friday. We're going to take an in-depth look at buying protection in SPX versus buying the VIX, doing the VIX hedge. Now, interestingly enough, let's just see what, if you wanted to stretch your money a little farther, right? Say that you only did this every 3 weeks, right? You went to 21 days. What if you spent the same $40? That's the 3,200 farther away, right? What kind of stuff does it give me? 3,200. Make sure everything is unchecked. 3,450. There it is. Further away from the money. 20% down still gives you 20,000 of protection. But then you say, okay, Bob, you got 52 weeks in a year divided by 3. You could do this 17 times, right? So 17 times. So then you take, what was it, 1,050, 35,000 times 0.03 was 1,050 divided by, let's say 17 times that you do it every 3 weeks. So you could buy one for $61. So let's say $60. So Lynn, let's go to the trade tab and say, no, we're not going to spend 40. We're going to spend 60. Did I analyze trade to 3,300? Analyze trade 3,300 gives you $100 closer to the money. Wow, look at that. $22,000 worth of protection compared to the 3,450, which gave us 26,000. Yeah. So what we would see here is utilizing the same amount of money. It's better to do the 14-day at 60. Now we could break it apart and say, well, what if you did it every week? We could, look at that. But I think basically what we're showing is the 14 days would be better than the 21 days in hedging your portfolio to the downside. It gives you a lot of protection. Yeah, I'm analyzing the same stuff. It's 20% down. So the reason is I don't care necessarily about the 12% down, do I? Because the 12% down would be the market being at 36.56. And if we go over here, where's my thingamajig? 36.56. There's 3,600 there. I mean, look, I'm within my profit bubble. I'm not so concerned about that.
Yeah.
Here's what I'm concerned about. I'm not concerned about the 12% down per se. Yeah, who was going to say something?
Yeah, you should analyze your trades where they have their maximum risk.
Yeah.
So determine where you need protection,
and
that's where you put your hedge.
Yeah. So you would need it at the 34.40 or so, 34.50.
Only starting. So it simply needs to negate the drop down below 34.50.
Yep. And what were those strikes that we just did? Look at this. I love it. This is a 34.50.
Yeah.
That's it, y'all. Look, that's amazing how it worked out. We sit there and go, it's the 34.50. That's where I need protection. And then you go over here and look at it, and God, that if it's not where we selected the strike, that's amazing. What are the chances of that? God, we're good. Isn't this a great community? Don't y'all love this? This has been a game-changing session, y'all. So we will break this apart further on Friday. All right. Anyone got any questions? We've been going longer than an hour. Look at us. We're the stuff of champions. All right, great session, y'all. Thanks for hanging in there. I will see y'all tomorrow.